Hey everyone, welcome back to Corporate Decoder, the place where we unravel the hidden stories buried deep within the corporate world. Today, we're diving into a filing from ADAPTIN BIO Incorporated, and let's just say they've been busy raising some serious cash and making some interesting promises. Get ready for a quick look at how a company can raise money without a big public song and dance, and what kind of commitments they make to get it done. So, what is the big news here? ADAPTIN BIO Incorporated, a company we've talked about before, has just completed a private placement, which is basically a way for companies to sell stock directly to a select group of investors without having to go through the whole public offering process. They sold 200,000 shares of their common stock at $5 a share. This means they brought in a cool $1 million. Now, why is this interesting? This type of deal is often used by smaller companies or those looking to raise capital quickly. It is exempt from registration because it is not a public offering, meaning they didn't have to jump through as many hoops with the Securities and Exchange Commission, or SEC, as they would for a regular stock sale. Think of it like a private deal at a club versus a concert for the general public. All of this happened on the 22nd of December 2025, but of course, there is always a cost to doing business. To get this deal done, ADAPTIN BIO had to pay a placement agent. This is the firm that helped them find the investors. They got a 10% cash commission, which on $1 million is $100,000. On top of that, they also got an expense allowance of 2%, another $20,000. And as if that wasn't enough, they also received warrants. These are like options that give the placement agent the right to buy more stock in the future. In this case, they get warrants to buy a number of shares equal to 10% of what was sold, with the same $5 per S-share price. So that is another 20,000 shares they might have to issue down the road. That is a pretty hefty chunk of change, and potential dilution for existing shareholders. Now, for the really interesting part and a bit of a promise, along with the stock sale, the company entered into a registration rights agreement. This is a critical piece because it means ADAPTIN BIO has agreed to register the shares sold in this private placement, as well as any shares issued from those warrants. With the SEC, what that means for investors is that those shares which were sold privately will eventually be freely tradable on the public market. But here is where it gets spicy. The agreement includes some pretty strict penalties if they mess up the registration process. If the registration statement is filed late, if it is not made effective by the SEC within a certain time frame, or if those shares can't be sold for too long, the company has to pay penalties. And these aren't small penalties. They are at a rate of 12% per year on the value of the affected shares. This is a huge incentive for ADAPTIN BIO to get this registration done quickly and smoothly. It shows they are serious about making these shares liquid for the investors. They've also committed to keeping the registration statement effective for a good chunk of time, up to 5 years or until all the shares are sold, or can be sold under a specific CC rule that allows for easier selling of restricted stock. This is all about giving these investors a clear path to potentially cash out their investment. So, to sum up the core of this filing, ADAPTIN BIO Incorporated successfully raised $1 million through a private sale of stock. They paid a significant fee to their placement agent and issued them warrants. Crucially, they've also agreed to register these shares, making them available for public trading, and they put in place substantial financial penalties to ensure they meet their obligations. Now, looking at this from a high level, this is a pretty standard move for a company that needs capital and wants to offer some immediate liquidity to its investors. The key here is that the company is putting its money where its mouth is by agreeing to these penalties. It signals that they are confident in their ability to get these shares registered and that they value their agreements with these investors. What are the risks? Well, if ADAPTIN BIO's business doesn't perform as expected, they might struggle to meet these registration deadlines, leading to those 12% penalties. Also, the issuance of warrants does mean potential future dilution of ownership for existing shareholders if those warrants are exercised. We also don't know much about the investors themselves, as it is a private placement, but they clearly negotiated hard for favorable terms. For ADAPTIN BIO, this is a necessary step to fuel their growth. The real test will be whether they can execute on their business plan and get those shares registered without incurring penalties. It is a sign of maturity when a company is willing to commit to such strict terms, but it also puts them under significant pressure. It will be interesting to watch how this plays out for them in the coming months and years. Alright, that is our breakdown of ADAPTIN BIO. Incorporated's latest filing, what is your take on these fundraising tactics and the commitments the company has made? Do you think this is a smart move or a risky gamble? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and be sure to subscribe for more deep dives into corporate filings. Don't forget to check out our Discord community linked in the description for more discussions and direct access to our team. Thanks for watching, and we'll see you in the next one.